Are you tired of losing a big chunk of profits every year to taxes? I bet you are. The truth is we all want to pay our fair share of taxes, but on the same token, however, none of us want to pay more than our fair share, and we shouldn't have to. Hello, I'm Matt McFarland, a Managing Director at Keystone CPA. I'm joined here by my partner Amanda today.
Hi everyone, I'm Amanda Hahn, and I'm also a Managing Director with Keystone CPA. Welcome, and thank you for joining us on this educational video series entitled 5 Creative Tax Saving Strategies for Business Owners. In this segment of our video series, we are going to focus on some creative tax strategies specifically designed for successful business owners.
The topic areas we're going to discuss today are 1. Turning bad debt into cash. And this strategy works wonders for businesses who have accounts receivable or who accept payment plans from customers.
We're also going to be talking about some easy strategies to defer payment of taxes for maybe 1 year or sometimes forever.
We're also going to touch on how to use taxes to increase sales revenue.
Yeah, and also tax-free or tax-efficient ways that you, the business owner, can extract profits from your business.
And lastly, we're going to touch on tips to plan for retirement and save taxes through your business.
All right. In economic downtimes, a lot of businesses are not doing well. Some businesses may be in default or even have filed or will be filing bankruptcy. For those of you operating your businesses where you either extend credit to your customers or deliver goods or services prior to receiving payments, you generally have accounts receivable. And an opportunity now exists where you will be able to take a tax deduction for any accounts receivables that you would be able to write off as what we call a bad debt expense. With the state of the economy the way it is, we're seeing an unusually high number of customers who are unable to pay invoices. So for those of you out there with accounts receivables in your business, make sure to analyze that account frequently to identify which invoices are uncollectible.
Yeah, and after you determine the uncollectible amount, work with your tax advisor to create the documentation needed to capture and deduct all those bad debt expenses. The deduction of uncollectible accounts will result in either a smaller tax liability on your tax return or sometimes even a tax refund.
Yeah, a simple strategy that's often overlooked by business owners is the ability to save taxes by deferring income. For example, let's say you have a big purchase order that comes in near the end of December. Well, if it makes sense from a transactional perspective, perhaps consider delaying receipt of that payment until the beginning of January the following year. Oftentimes, by delaying recognition of that income for even just 1 day, allows you as a business owner to essentially defer the tax liability associated with that for an entire year.
So let me give you an example here from one of our clients to help you understand the potential benefits of this strategy. Our client owns a consulting business where they were able to control when they invoice their customers. So we work with them to delay invoicing $30,000 of services from December until January 1st of the following year. And the reason we implemented this strategy for this particular client is because we perform multi-year projections for them and determine that they will be in a lower tax bracket in the following year. So the benefit to them was that not only were they deferring paying taxes on that $30,000 of income for an entire year, but they also paid $6,000 less in total taxes on that same income because their tax rate decreased by 20% from the first year to the second year.
Yeah, and there are a lot of options with this type of strategy, but the IRS does have defined specific elements that must be in place for these types of strategies to work. So just make sure you're working with your tax advisor and ensure that you structure these transactions appropriately. And of course, as with anything else in tax planning, make sure that these strategies make economic sense for you and your business because you wouldn't want to lose a big customer because you delay invoicing them. I would have to say, though, I think your customers will not mind a small delay in paying you.
Right.
They'll probably appreciate it, if anything.
Now, let's move on to the deductions for businesses. We already talked about deferring income as a tax-saving strategy, and now on the flip side, it works the exact same way for deductions. For example, if you plan on buying a new computer for your office early next year, well, why not purchase it a month earlier so that you can take the deduction now? Let's go over some other common deductions that are available for business owners. Things such as taxes, insurance, accounting fees, legal fees, and marketing fees to name a few. And here's an additional tip. Contact your vendors for the expenses that we just described to see if they will accept credit card payments. If so, you just received the tax benefit of prepaying those expenses without any money out of your pocket. And that's a win-win for everyone.
Yeah, that's a great strategy. So let's take this concept to the next level. Have you ever thought of using tax benefits to increase your sales? Well, we have a client who's in the business of educational courses, and we worked with their sales department to educate them on how these tax deductions could benefit their prospective clients who purchase courses from them. Our client used this knowledge to educate their current and prospective customers, and because their customers then understood this potentially huge tax savings opportunity that they would receive by buying before the end of December, our client was able to dramatically increase their sales. And essentially, they pre-sold over $70,000 worth of course materials near the end of the year. So here's an example of how knowing the tax benefits can not only help you save taxes, but it can also help you to increase your sales volume if it's applied correctly.
Yeah, so that's a great example of how tax savings opportunities don't exist just for you, but you got to think about the whole picture there. So let's look at also some tax efficient ways to extract profits from your business. There are many options to consider when determining how to get money out of your business. And depending on the type of legal entity your business is in, there are different techniques available. So for corporations, one of the most common ways to get money